literally spent forever and a half a day going through my 10-year-old's homework with him. Grades are finalized on Thursday, so it was dinner and then tons and tons of lovely worksheets, if any of you guys remember those days. So that was my evening. I will get it up, I promise. And I know I'm going to put that indicator in there as well. So yes. Let's see, let's check the chat. So first off, does anybody have any questions as I kind of pull up this first screen that goes over our warning and all the stuff that we have to go through legally? Does anybody have any questions in terms of pairs, simplicity, the scanner, any trades that you're taking or want to drag and drop some of your entries based off of the triple arrow, the scanner, the SuperEZ pips, the daily dot, the SuperEZ SR, trying to think of all that other stuff. By all means, you can either A, raise your hand or put your name in the chat, totally up to you, or you can come on out. But obviously we have to start with our disclaimer. You guys know that I'm a very big advocate of investing in general across the board. I feel like business is the way to be. I guess I'm wired that way. But as you guys also know, it's not like a job. There is no guaranteed paycheck. There are no guarantees in Forex, and it is very high risk. So, and that's anything, any kind of business, any kind of investment really across the board. So just know that. Please don't trade what you can't afford to lose. Please know that anything we discuss on these calls is for educational purposes only. I am not your legal advice. I am not your financial advice. I am just another person on the other end of this line, kind of happen to get good at trading and has the ability to kind of talk and hang out with you guys. That's really all. So educational purposes only. I put this slide up here for those of you guys who are brand new. Please take a screenshot of it. I know it looks so elementary because it honestly is. If you're looking to compound your account from, let's say, a few $100s to a few thousand, or a few $100s to 5, 6, 7, figures, this is what you need to know. And it looks so simple, right? So we can make this 90 pages long and we can make it this amazing kind of order of operations like some companies do. But the reality is this is all it really comes down to. And we tend to overcomplicate that. We tend to overthink it. We tend to overanalyze and analysis paralysis, if you will. So we don't want to do that. We want to really keep the main thing, and learn how to follow just these steps to be able to compound our account at any percentage, whether it's 1% or super high risk and fast and like 10, 15% per trade. No matter what you're doing, you need this level of stuff in place. So does anybody have any questions on that so far? Anybody brand new? Never talked to me or hung out before? No? Okay. Okay. Well, then anybody have any questions in terms of SuperEZ, scanner, simplicity, easy pips? Try to make sure I have them all. Any of those things, trades you've taken or things that you want to look at in terms of those things? Anybody at all? Because then I'm just going to go straight to trading view. Taylor, or I'm probably messing up your name. Tayan? Am I saying that right? I'm new, but no questions. I can't say your name either. I will probably butcher it. You don't want me to do that. So Kenneth, I can say that name. So welcome. Welcome. All right. Does anybody want to learn how to mark up your charts for yourself? Okay. Tayan, how do you put the daily dot on your chart? You get that from the advanced membership group. And then you literally just drag and drop it. I believe you have to add something else to your chart. Miss Donna, can you confirm what they need to add?
Yeah, it's just one of the, it's indicator to put in the library folder for it to activate.
So you have to have and it's all those steps are on the website. So if you guys want that, make sure you go to the website. I actually don't have the newest coded version myself either. So just so you know, I was getting that from Miss Donna today too, because it's a process for sure. It is a process. Yes, Ray, they are different. Yes, they are. They are different. They're marginally different. So I'm not going to sit here and say that they are, 1,000% different. The concept is the same. I believe the coding is slightly different and the inner paint's a little bit less. It adjusts a little bit less, is my understanding. And that's my experience with the original version that I did have. But I'm not brand. I haven't used this. Supposedly it's the same one that I was using, but I cannot verify.
From what I was seeing, the daily dots are allowing price to pierce through a little bit, to do some wicking through.
So more like those fractal ones, right?
I'm sorry?
So remember the fractal ones? It's kind of like that where it allows price to go through without repainting.
Yeah,
Gotcha.
I think so.
Okay.
That's my recollection. It's been a while since I looked at it.
Yeah, me too. So I'm not 100% sure, but that's kind of it's different, but I don't know to what extent. So thank you, Scott.
Like everything, it's supposed to be more better.
Yeah. Yes, it's just coded a little slightly differently, and it does repaint less, is to my understanding as well, and from how I use it as well. So,
All right, cool. Thank you, Miss Donna. All right, so real quick, Kenneth, your question, just so you guys know, you don't have to type in the chat because I can't always see the chat, first off. Second off, I would love to get to know you personally, but I will answer this question, Kenneth. It says, if I have simplicity, how important is the scanner, or what role does it play? If you have simplicity, to me, I think the scanner is almost more important. And I don't know if I should say that, but I will say that. And the biggest reason why is because ultimately the scanner is going to pop off a signal. So you'll get an alert like on your desktop or your phone or your MT4. And you don't have to have, like, as you guys know, with MT4, you have to have all these charts open with different setups so you can get the alert. You can have it on one chart. You can decide the time frames you want to trade, the pairs you want to trade. If you want a super fast signal, so that you would want to use it on a higher time frame, by the way, or a super slow, more confirmed signal, you would want to use that on a lower time frame, by the way. And then you can get alerts for all of them. And then once you get the alert, you can go to your computer, analyze it according to your rules, and decide if you want to take it. Versus simplicity is great, but we have to sit in front of the computer and then click through a bajillion pairs and just watch to see if it moves. For example, if we're using a larger time frame, this is a lot of days and hours in between. So we might be looking like we're getting a signal, but we have to wait, and then we have to wait for a pullback. It's just this whole big long process rather than getting the scanner where the scanner just sends an alert. You go to the chart, you give it a check. If it's ready, you enter. If it's not, you put it on a watch list on your desk, and you'll go back anytime you come to your computer or you have a minute, you check those pairs first and you say, hey, cool, this is what I'm looking at, and go on with your day. So to me, the scanner is more valuable personally. I don't know if that's what I'm supposed to say, but that's what I'm saying. So hope that helps a little. Does that answer your question, Kenneth? The chat is a little delayed. Okay, so while he's coming up with an answer in the chat, if he has one, does anybody want to learn how to mark up a chart? Has anybody ever marked up a chart before? Does anybody know anything about marking up charts or anything at all? Have questions specifically in terms of a naked chart to find basic supply, demand, support, resistance, or a trend line? Anybody know? Because look, the simplicity is great, and we're not trying to overcomplicate this or
I like to see the supply and demand.
Okay. Do you know what supply and demand is? Or what the difference?
Consolidation and the highs and lows.
Okay, yeah. So do you know the difference between supply and demand and support and resistance?
Yeah, I know what support and resistance is, but it's still trying to understand the concept of, the supply and demand, where the market is going. I mean, that is something that I definitely would like to see.
All right. Awesome. Well, that's kind of what we're going to be going over tonight. So that's perfect. First off, what I want you guys to know, and the way I teach, is everything I say, and if you want my God's honest opinion, anything most people say, especially in the trading industry, there really aren't any hard and fast, if this, then that, concrete rules, strategies, trend lines, support and resistance, or reactions or actions in the market. So everything is all very theory based. I don't care what theory you're subscribing to, what concept you're studying. That includes things like support and resistance, supply demand. That includes, our strategy or 10 billion other strategies. They're all theories. So now that I've said that, I'm going to also say people have different definitions for supply, different definitions for demand, and obviously support, resistance. They all mark up their charts in so many different ways. Some of them I do feel are slightly better than others, but for the most part, if you have found one that works consistently for you and is giving you results, I'm not going to knock it. So let me just put that all on the table to say that's where we're at. But
and also one more thing too, and that's just that if there were one hard and fast set of rules for how everything worked, there wouldn't be a market.
No, that's good.
Everybody would be taking the same trade in the same direction, and there'd be nobody on the other side. The only way this works if there's somebody on the other side of that trade.
See, that's well said. Thank you. That's perfect. Because guys, if we're all buying or trying to sell here, the market, there's no market. There's nothing to trade.
In fact, where you just pointed, let me get my annotate out. This, nobody was buying.
There you go. And it came back up and it retested this right here, which once you see things, you can't unsee it. Okay. I see that now. I see that in a different way, just so you know. But you can teach on that part tonight if you want to add that in. So let's try to keep this super short just so you guys can actually watch it in a replay is my hope. So the first thing I'm going to do is define supply and demand. Now, I'm not going to say this is the hard and fast rule. I'm going to say that this is what I taught and this is how I was taught and this is how I see the market. So first thing, so we have a baseline because we need a baseline, right? We can't just decide what we feel like all willy-nilly. Is I'm going to go down here and I'm going to hit this nice little circle that refreshes the chart. This way I have a standard number of candles on my chart. So the difference between doing this on this chart and on MetaTrader 4 or MQ04 or any of those other platforms is now I have a standard number of candles that I'm working with on any pair that I'm trading. So it's not an unknown variable that I am not controlling. The amount of candles I'm going back when I do my analysis is standard. It is across the board the same. So I'm taking that variable out of the equation because please know there's 1,000 variables. You guys don't even know our variables because you've never been taught them. So first things first is to hit that little button and I'll mess up the chart again just to show you. Notice how this has a set number of candles. So when we mark up this chart, I know two ways to do it. I'm going to go over the easiest and most kind of fluid one, at least for me. I feel like it's the most simple and most accurate, at least for how I trade. So supply and demand is pretty simple. Supply and demand is your most recent swing high and your most recent swing low. So that would be up here. So you can choose to, let me make this pretty simple. I'm going to go straight to the line chart. I'm not going to play with the candles. I'm not going to care. I'm going to take all the guesswork out of it. And again, we have a standard number of candles here. So I'm taking that variable away from the equation. So first things first, this is your supply area. This is your demand area. Now, if we need to make this a little bit thicker, okay, because remember, supply and demand should be more of a zone versus a trend line versus a support and resistance. The support and resistance is in general considered to be a thinner amount and supply and demand is considered to be a thicker, area. Again, that's just kind of how I was taught, but keep it kind of simple to tell you what the difference is. The supply and demand is at the bottom of the chart. Anything in between is considered support and resistance. So now that we have the very tip top of our supply and our demand, we need to know how thick this is. And there's a handful of ways to do that. The most common and the one that I was taught by a really, really good trader, and I feel like is duplicatable. Because remember, if we do something, even if it works, even if you make 10 grand off of this one step that you took one time, if you can't duplicate those results, you've effectively done nothing. You've bought a scratch off ticket and now you're back at square one. So that's not going to help you be a long-term investor or technical analysis, trader. It's not going to help you be a day trader. It's only going to mean you got lucky once and now you're on with your day. That's it. So duplicatable would be, again, we have a standard number of candles. I'm going to keep reiterating that. But if we take the most recent kind of engulfing candle to the downside, okay, that's what we'd be looking for. Our biggest bearish candle would be this big candle right here, if you guys can see that. I hope that's not super, super over complicating it. You'd want to take 50% of this candle to find your supply and your demand zone. So if I do, let's get my measuring tool. I'm not on here too often to actually measure. But if that is, 370-ish pips, right? So we're looking for approximately half of that. So I'm going to get my little box. That's in and around this area, right? This zone, and for here we'll draw a box, is considered your supply and your demand zone. So if you're looking to how to find where that area is, and this is a pretty big area, so I don't know if I would love that personally, but just to kind of give you an idea, it's on this one, found it. Yay. And you can actually type this in to make this super long. You can change its colors to be buy and sell. Many people, in fact, do, but it's totally up to you if you want to do that. So same thing here. The most recent engulfing candle is this one right here. And 50% of that is much smaller. So I'm not going to bother measuring this time. I'm just going to go, approximate 50% of that candle. There you go. There's your supply and your demand zone. That's what you're looking for. So now that you have that, I need to reset the chart. If you go to the line chart and kind of see where that lies, you'll notice this line where my crosshair is kind of lines up with previous structure. Notice on this one, I did not draw a line, and there's previous structure. And if we drag that all the way back, again, there's previous structure in this area. So that's just looking at the peaks. Same thing over here. We did not have it on the line chart, but you'll notice when you kind of follow that rule, and it's not an exact art, it's not an exact science. I just have done it quite a few times. Notice how the box we drew happens to kind of land almost exactly on some of these area. And you can drag or drop it a little higher, a little lower. It's not going to make an enormous difference. This isn't meant to be a hard and fast number, quarters theory kind of Fibonacci kind of level, but it just shows you on the chart where your highest high and your lowest low is in current time. So that's your supply and demand. Does that answer first and foremost? Tiffany, what difference would you like to know? Oh, the supply and demand and support and resistance, I'm guessing. Gotcha. Okay, so that's the difference is every bit in between, this is going to be support and resistance. So I'm going to keep it on the line chart and just make quick work of this. So I'm looking for, from this zone, an area where we have 2 or more touches. So same thing with trend lines, guys. Same thing with anything. You need 2 or more touches. So on the line chart, it really cleans it up, and it cleans up some of the mistakes that even I would make if I had the fractals on here. Some of the mistakes many traders make when they have the candles is you have all this mess and you're going, well, should I go off of the body, or should I go off of the wick, or should I go off of the fractal? And those would all be very different lines. I mean, it would be just all over the place. There's no real clear answer. But if you go to the line chart, you're going to end up with a line probably somewhere pretty close to like where Scott would draw it by hand. If he was on the live calls and he was drawing a line on my live screen, you can tell that his natural bias is close to where this would be than where the fractals would be. Fractals probably be somewhere down here. But either way, this is what you're looking for. 1, 2, 3 touches. So the sharper the peak, the harder the turn.
And I use wicks, actually.
You do use wicks.
Yep, I use the body of the wicks. I never draw them as lines. I draw them as zones.
So if I take this off here just for conversation purposes, I'm going to remove this. Where would you draw that line? So if you were trying to find a zone right here, I'm kind of curious because you're good at drawing little boxes on my screen. So now I'll turn it back to the lines and draw it where I just drew mine. Well, I think I had mine up a little bit more to be touching all 3 of those. So that's kind of how I would have it, a little bit closer. You see this rejection, rejection, rejection. So you've got 3 or more touches, and they're opposite sides. So you've got downward touches and upward touches. That equals a level of support and resistance, right?
And if you put the candles back on, you can see how the wicks push in and the wicks push in. That's giving you further confirmation. You can have breaks on the other side that pull back in. Doesn't really matter. These are all wicks that are pushing in. So it's saying that when you get into that area, there are people on the other side wanting to take price away.
That's the whole buyers versus sellers kind of mentality. So that's where your levels of support and resistance are at. So that's one level so far, right, guys? Now we're going to go back to the line chart. So we've got one level. And again, we want to usually work from closest to price, because if we pick a whole bunch of lines up here, that's not going to do us any good. Pick a bunch of lines down here, not going to do us any good. You do need to know where your supply and demand is, but otherwise you need to find the support and resistance that's closest to current price. So leaving it on the line chart, let's take a look. You've got one peak here, another peak. So somewhere in and around here, I'm going to put it kind of at that mid-range, because again, I'm not doing boxes, I'm doing lines. So if this was a line, it would be a little bit different. I'm guessing if I drew that all the way back here, it would touch all the way to this one, give or take. So then you've got this area where, okay, it's kind of busting through, rejecting off of, pushing up. This probably didn't have, may or may not have had wicks, but we'll see when we turn it back to candles. But here is the most, current level where we're kind of sitting at now. So now we want to see if we break above it and retest to get the continuation to the next zone, or if we reject and go down. So We'll explain how to use this with your simplicity system or triple arrows or whatever it is you're using. But first, let's finish marking up this chart. So price is currently here. Now we need to find one that's at least below price. You got one touch, one touch, one touch, one touch. So we are going to go somewhere in here. That's, this isn't an exact science. We're just looking for kind of a basic area of where price is at. And granted, this is a much higher time frame. So somewhere in here, we feel like that's enough touches to say that this counts. I'm guessing this was a wick, but we'll see. So we've got one below, one above. This is still enough room in between zones to get some pips. It's not so tight where some people make so many lines that they can't even take a trade in between the two zones because there's like 10 pips here, or there's 2 pips here. That's not going to work. So your zones need to at least have some room. So you need to pick the best of the options in front of you. So there's more room to the downside. I'm going to look again to the downside to see where our next kind of zone would be. And this is a slow moving pair. So I know I can have more room. If this was a fast moving pair worth more when it moved, my zones would be a little tighter, but this is a slower pair. So my zones are a little bit closer, a little bit further apart, I should say. So going all the way back to here, that's a little bit too low. Just looking for a few touches. So 1, 2, 3.
That's looking good to me.
That one looks good. So that just gives us a few zones. I mean, we could probably pick one in here if we were looking for a smaller zone, or if price was pushing up. Let's measure. That was 100 and some odd pips. So half of that is 50. We could pick one more just because price is currently moving up. We'll pick one more. Does anybody see any others? We got 1, 2, 3. Move this down a little bit and wait. When we put the candles back on, you'll be able to see what that looks like in real candles. If you need one more, you could definitely do one more a little bit lower, but we're going to skip that one. That's somewhere. And that's about it. So now you've got your entire line chart. You know where your supply is, you know where your demand is, and you know where your next levels are. No Fibonacci, no quarter series, no Elliott wave. This isn't going to repaint. This isn't going to self-adjust. This isn't going to decide that that wave wasn't big enough or that quarter theory wasn't strong enough. This isn't going to say, well, hey, price is moving down, so this is 100% of the move. This is 100% of the move. This is 100% of the move, like you would get on Fibonacci. This is going to stay stable. And if I have the ray on, you'll see this kind of be trusted throughout a long time. You can make this supply and demand zone last for a year. I mean, it'll still be showing up in the background if you don't delete these objects, just so you guys know that they'll still be here when there's no candles this way. These lines will still be here, and you'll see how accurate, if any, this is accurate. And I will not mess with this chart. It's not my actual trading view chart anyhow. So you'll get to see if this was accurate. If we come back to these same charts in a few months, a few days, this is the day chart. So it's going to take some time, mindful of the election. So yeah, there we go. Now I'm going to go back to candles and take a look. Does everybody see how we did that? Does anybody have any questions on how we did that? It's pretty simple. It's pretty across the board. It's not super complicated. You guys are a chatty group, huh?
Mind if I talk about the reasons why it matters?
Yep, go ahead. By all means.
So in particular, we're looking for places where price comes up to a point and pulls away from a point strongly. Because what that means is that up at the top there were a bunch of sellers sitting up here that say, I want that price, and when I get to that price, I'm going to sell. And they come in like crazy, but when price moves away that quickly, there are sellers that still want to sell. What happened is enough sellers piled on that it overwhelmed the buyers, and price just dropped. So when you get that kind of big drop like that, you don't have enough buyers to hold it up at those prices. But you get down into this area, and now you've got some buyers popping in. So you see price moving away from that bottom area, and you get these vectors up where price pulls away quickly, and you know that there are more buyers still sitting down there. And if price doesn't want to get down there too quickly, when price gets down at least that far, buyers will start to step in and say, this might be as good as it gets. I'm starting to get wicks down here. And so they pile in and price moves away. But here's the thing, price was moving down strongly here, and then it pulls up to a level, and then the sellers just push it right straight back down again. There are sellers up here that didn't get in as well. And so that area then becomes an area over here. So things start to react at those levels when there are sellers and buyers that are left behind. So, when price came down here, it moved away quickly, and there were buyers that got left behind. So when price got back down there again, it moved up again quickly. So this is an area of supply because there are lots of buyers that want to be there. But this area up here is really untested at this point. Now, remember, we had a level here. We did get up there and it pulled away, but we also had a level right there. And this pushed right through that level, which just sort of cancels it out. So this level is no longer active because the sellers that were there got stripped out when price went up to here, up to the top. So when price got up to there, it knocked these guys out. So then we move back down around, so think of it as that there's like these landmines that get planted. And when price breaks through those landmines, they're done. You don't need to worry about them anymore, with one exception. And that is that sometimes people have memories. It's all about memories. When price got up to this level, it went away like crazy. When price got up to this level, it went away like crazy. So if price moves through that, they remember these levels, and sometimes we'll come back and trade them again.
I think that's the point, is when price moves to them and rejects, we know we're selling down. If it breaks through it, we're looking for a continuation. As long as you understand that it's not some straight line, if you understand that this is more of a box like what Scott is drawing, or this, you understand how to treat these areas. So even if we got a breakthrough, for example, here, we don't want to just say, oh my gosh, it's breaking, we buy. We want to say it's breaking, let's wait for that retest and then buy. That's the whole concept. Okay, so to kind of piggyback off of what Scott said is, okay, so how do you use this information? A lot of you guys are on here are not using my strategy necessarily. Some of you guys are using the simplicity. Some of you are using a version of triple arrows or the SuperEZ, I believe it's called Easy Pips, that came with the scanner, kind of a variant of simplicity. So you guys are all using different things, and maybe you're using your own thing. That's fine. But whatever you're using, knowing that the stuff that Scott just said in terms of the levels that are on this screen, knowing that, okay, we're down here in this zone. Okay, we don't know really it's a zone at this point, because that's all past data. But so going off of current data, we have to go off of current data because this wouldn't be here yet. You know that, okay, right now you're at a level of interest. You're in a bullish candle. You're waiting to see what happens. You've got a high to break, and then you've got another pretty close zone. But if we break this zone, you have a really healthy room to buy to the next level. This is the entire concept of that very lengthy and very beneficial book, Trading in the Zone. So if, like, for example, if you got a signal down here, for example, with the simplicity scanner or whatever, any of those systems, but you know that you still have this level too close. So let's say you get the signal on this candle, you know you have a huge level that's coming up. You want to wait for it to come back and retest, or to break that level and retest before you take the buy. Taking blind entries without understanding even just basic fundamental structure is a really good way to give away 10 grand. And if you're going to give it away, I mean, I know people's address you can send it to if Christmas is coming and they need the money. So that's as honest as we can be, is understanding that these levels, if we took that stuff off the chart and we did it from here, if, for example, if we did it, just drew zones here and then moved it back and saw how those zones were respected, you would see, okay, wait a minute. So when this gets retested, when it rejects, we know how to sell. We know how to buy. We know where to sell and where to buy. And in no shape, way, or form, guys, am I saying you should be timing tops. Oh, we tested here. We're going to, it's a double top. It's an M formation. We have to sell here, because price could very easily go against you. And that's a really, again, it's an overbought, oversold way to trade, which it works for a minute. And most people know that that's true, but it also doesn't work. And it's not something that's, we're going to use the word duplicatable. So it has those willy-nilly wins in between, And it's nothing that's duplicatable over this course of, let's say, 50 trades, of 30 trades, that you can duplicate similar results on with any amount of accuracy. You're not going to get 60 plus accuracy trying to time tops and time bottoms, but you will get 60, 70, 80, 90% accuracy being able to say, hey, I got an alert on the scanner, but I missed the move. I know where the zones are, so I know that I can take it, when it comes down and retest the 50, I know that I can take it to my next level. You'll know that stuff moving forward. And once you have this drawn, the coolest part is if we made an analysis on this pair right now and we come back in a week or two and you see, well, wait a minute, if I draw a vertical line of what day we drew this on, and we come back to this chart, not so much in real time. Real time is kind of boring, but we all know that. Real time is not fun. But over time, when we see what this is doing and we say, hey, we're pretty confident, we're above the 50, we push down, we've got a couple of waves happening here, we do have some room. So if we land here, we're looking for a buy to here, and we draw one of these lines, for example, where is it? Long position. That says, hey, if we get to here, so I'm going to have to put it here. I'm putting it off to the side, meaning it hasn't happened yet. So I know that if I come back and look at this analysis, it means what conditions I wanted to be met have not yet been met for me to enter. If I'm saying it's valid right now, I'm going to move it to the current candle and to the current price of where I enter. But since I'm saying the conditions I'm looking to be met have not been met yet, I'm going to have my vertical line to show me where I was analyzing it, and I'm going to have this off to the side. So I know how to read my own analysis when I go back to say, how right was I? Was I close to right? Did this play out? What was my theory? What accuracy do I have across these pairs when I analyze it in this fashion? Does that make sense in terms of what I'm doing to mark up my charts? Does anybody have any questions on that? Because this is something you should be doing every Sunday night, is taking all the pairs, going to a very large time frame and getting an idea of what the pair is doing across the board, getting some ideas of, and you can go all out. So for now, I'll delete this. You can say, hey, if we reject, you can make all kinds of cool stuff. You can make ghost bars, which I'm not going to get into that now. I don't want to get super, super crazy, but you can say, hey, I think it's going to pull back a little bit, and I'm going to have a really tight stop loss. We're going to say above this level. I believe it's going to pull back at least this much. I'm going to make this tiny. And then I believe it's going to do something like this. Oopsie, buy. Come on, get out of my way. That if we do break up here, or when the conditions are met and I buy, because this is again off site from where the price currently is, so you can tell these are trades that I'm not currently in, and say that this was my target, my potential target. You can draw lines, you can draw fake candles to show price coming down and then retesting. You can do all kinds of stuff, and then you can come back next week and watch how this moved. So when you're taking all these trades throughout the week, you don't see that. You don't see the bigger picture of what's happening in the week, because you're in and out, you're in and out, you're in and out. You didn't hold long enough to let it play out. You got scared, you got wicked out, you got frustrated with the signal that got knocked you out, but then went in your direction. That happens all the time. It happens more often than any of us care to believe. This would have knocked us out a bajillion times before we got in here. If you had too tight of a stop loss, this would have been a hot mess. And you probably got a signal on the simplicity over here, depending on your settings, which meant you got knocked out. You didn't trust it. Maybe you had enough faith, so you got in again, you got knocked out again. And then of course it went in your favor. But understanding the bigger picture of this, it will allow you to have some comfort in putting your stop loss below structure, above structure, and actually kind of holding it. So Reginald said, so you place all your support and resistance lines on the day chart? Yeah, well, mostly in the advanced membership group, we're trading the indices. So I only have been trading that in GBP USD on the smaller time frame. So anything else, like I've played with the scanner quite a bit on the 30-minute and a few other settings. At the end of the day, I don't want to be on my chart all the time. I'm on these calls a lot, and then I do a lot of other meetings and a lot of other stuff as well, real estate included. So I don't want to be micromanaging my trades all the time. So for now, I was playing on the 30-minute for a hot minute, which means I was marking up the charts mostly on the 4-hour. But now I mostly am only doing the day chart because I'm only trading the day chart. for Forex pairs. And that's, going pretty good. It's just,
So let me try answering this in a different way. It's the same answer. I'm just going to explain it differently.
Okay.
It depends on the time frame in which you want to trade. So if you are trading a high time frame, then daily is probably okay if you leave yourself enough room. If you're trading something like a 5-minute or a 15-minute chart, you want to go a couple time frames higher to get more significant levels for those time frames. So you end up with more space between your levels. And it sort of depends on the space between the time frames. If you're on a 15, a 30 isn't high enough because that's only twice as much. So you want to go to at least an hour.
And if you're marking up your charts on the 5-minute and you're trying to take 1 hour trades, you're just going to have these baby zones with a half a pip, and it's not worth it. So how many support and resistance lines should I draw? Because I can see other areas too. I always will still create a rule for yourself, Mylan, if I'm saying your name properly. If not, please forgive me. But create a rule for yourself. Guys, most of this is very individual. And my hope that when you leave my classes or my little hangouts is not necessarily that you just take everything that Jenny's voice says and you do exactly just this. My hope when you leave these classes is you find your eyes on this chart. You find what you see and you put it to work. You put it to the test, which means you need to go out and actually follow that exclusively for long enough to get results. And that could be bad results even, but results nonetheless. So in short, the answer would be create a rule for yourself. If price is currently here, you can say, hey, I can have no more than 2 support and resistance line above, 2 support and resistance lines below, and 1 supply and demand. That gives you 6 zones on any time frame. So if we go down to, let's pick a different pair. Do you want to pick a pair for me, Mylan? You pick the pair. I'll go to the different time frame.
GJ.
GJ it is. Okay, so let's go there. So GJ, pick a day time frame, okay, or do you care?
Yeah, I'm learning.
Do something drastically different. Do a 30-minute.
There you go. Let's go to the 30-minute. So again, rule number 1 is we want to make sure we have something that's not variable. So we need to eliminate as many variables as we can to get an idea of what we're doing. Otherwise, one day we could be marking up the chart when it was like this. One day we could be marking up the chart when it was like this. And if we don't know the difference in what we're doing, we're going to get different results, and then nothing is duplicatable, and therefore it's all invalid. So duplicatable only, there we go. I used to actually measure the candles on my chart because I didn't know about that button. If y'all want the whole truth, nothing but the truth. Sad but true. One of those things we all have to learn and to admit. But same thing, so we're going off just the highest high. You don't even have to necessarily find your how do you say, supply and demand if you don't want to. So if you're not looking for the highest high and the lowest low, and let's say you're only doing a smaller kind of trades, you don't have to make, your biggest high and your biggest low as important zones. You can choose to make a lot of really small zones. I know one guy, he's got like 500 lines on here, and I'm looking at his chart like, how do you see anything? But the thing is, it works for him. So you have to decide what works for you. Right now, price is moving up, 30-minute time frame on GJ. So this is pointing up, price is moving up. No question there. So the first ones we're going to draw are the ones that are to the top side, keeping it on the line chart, just making kind of quick work of this. Here's 1 peak, 2 peaks, 3 peaks. I'm going to go with kind of the mid-range of those just to kind of keep it real simple. You'll notice that as we draw backwards, it kind of be honoring over here too. I always find a little bit of synchronicity in that. Let's find one more to the top. This is a huge move. This is a huge move. So we barely kind of have this really maybe baby area in the center. It's not beautiful. It's not perfect, but it's kind of somewhere in here, right? Price busted through, rejected. There's a peak, busted through, came back. So this kind of this area, not perfect, but we're just going with what we can go. And this is not a straight line. It's more of a box area. So if drawing a box helps you, it helps. You want another one? There's a whole bunch more. I mean, I can go all willy-nilly. I can draw 50, but we don't want 50. We want, depending on if you're scalping or not, you need to have, I like to have at least on some of the indices that we trade, I have different amounts that I want in between my zones because of what they move per day or per, what their ATR is. This only has a 10 pip zone. That's not a very big zone. So as much as we want this zone, we don't even need this zone. We can go up and say here, at least this zone has some room to kind of give you an idea. So this zone has some room, seeing how we're on the 30-minute chart. That's got almost 20, and that's not bad for a Forex pair. So I guess if I'm trading a Forex pair, this is the zone I would draw. It's a little different because I haven't drawn on the 30-minute time frame in a while. So another approximate 20-minute zone is somewhere around here. Let me reset so I don't mess myself up. There we go. So there you go. You've got 1, 2, 3, plus your structure above it. Looking for one below it. Again, gets a little tricky because there's a lot of mess in here. This comes to be a really big box. But remember, we don't want less than like a 20 pip zone, even on, this is GJ. That's a reasonably fast mover. So 20 pips is not a whole bunch. So minimum of kind of 20 pip mentality. Reset it again. There we go. Kind of, you see this one that didn't kind of bust through, came through, peaked barely. You've got a kind of peak somewhere in and around here. And again, I'm not choosing this one because it's just too close. Like, that's not enough for me to care about. So just to kind of tell you the difference in why I'm drawing mine, where I'm drawing mine. Again, we don't want it too close, even if this is structure, unless it's huge support and resistance. I don't care enough to draw one here. I mean, because this is a perfect one. I would take that one before I would take this one. To tell you the truth, I would take this zone as this perfect rejection area, because I'm guessing this rejected pretty hard too, more than I would this one, even though the zone is a little bigger.
I'm not on candles right now.
Hold on. There we go. I had to mute John. But what did you say? Because I like that zone way better than this one.
Candles.
Put on candles. There you go. I mean, this matters, but this is a much more stronger zone. This pushed hard. This played around, but these pushed hard. 1, 2, 3. Pushed hard. And it pushed hard here, rejected here, 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 here. We busted through, rejected, pulled through. Like, this is a much more important zone than just because you can find the spot doesn't mean it's the best spot.
But, the way I'd look at this is, when you're looking at this, we're moving away here. So the first thing we want to look at is where was the last place, the closest one where price got up and pulled back rapidly. It's right there. So that makes our next zone of interest somewhere right in here. We've got strong rejection there, and we saw it back here as well. So that's the next place you'd be looking for. North and south, it's this one. And then if it breaks through, going north, then we'd be looking at this. And south, we'd be looking probably around here. That's the way I'd be looking at this. And another one down here. But if price is broken through an area like this was a zone, but when price broke through it, those are dead.
Wait a minute, you're putting it this one?
I'm saying that this used to be a zone. Yeah.
When price broke through it,
When price broke through it, that cleared up, it overran the orders that were there. Those people all got filled as price was moving up. The buyers were buying all of those sells and continued to move it up. So there aren't sellers sitting there anymore. And then price moved through this level and got up just a little bit higher, but it moved so rapidly away, there are probably still sellers sitting in that whole area. It's that rapid price movement that tells you that there are way more sellers than there are, there's way more sellers up there than there are willing buyers at that level. Because you have to have two sides to that market at all times. When there aren't two sides, you get this.
You get a beautiful, perfect move. That's what happens, which doesn't happen often. And when it does, you can almost never catch it. So there's that too. Okay. Well, so you're saying that this zone has no value?
Which zone? Well, it's more of a big fat pillow. Price will move into that and move out of it.
Okay, yeah, I can see that as a pillow because I definitely see it as a box, but I definitely think it has a value.
No, when I draw these boxes, I think of them like pillows. When you throw a ball into the pillow, it bounces back out unless you throw it really, really hard, and then it can break through and you got feathers all over the place.
Or dollar bills, one or the other. Because if it breaks through really, really hard, like this does, you get dollar bills all over the place.
Pillows with dollar bills. My God, I want to
Gotta
live.
let it rain. Gotta let it rain.
Come on, did anybody else have that image pop into their head? Because I mean, I have the kind of mind.
One of those. I
Come
did.
I totally do.
Into Jenny's house tonight and steal her pillows.
Hey, it's not a bad place to hide those. I mean, some of those zippered, down pillows, good place to put some dollar bills in there. Just don't put dollars. You better put like Benjamins at least. I mean, dollars is just too much space. I'm just saying. So, okay. Back to this. That's how, yes, these are zones. So I want to reiterate what Scott said. These are zones. These are pillows. I love the pillow example. I'm never going to get the vision of dollar bills popping out of pillows. But either way, this line is not a dead line. It's a zone like that. But we can't have, a bajillion boxes on this screen. I need to see it in a clear way. So this is a variation of how I was taught. So I just do simple very lines. The only ones I make into a big fat box are the supply and the demand, because those, we're trying to catch the big part, right? We're not trying to care as much about these and trade them in terms of this heavy hitter kind of way. We want to know when the big level is broken, and the big level is broken or rejecting, to look for the rejection or the breakthrough. So that's why we make this a box and that a box, but we don't make the middle ones a box, at least for me. And I'm not going to sit here and fuss with you and say, hey, it has to be Jenny's way, because it totally doesn't. It has to be a way that you can see it. And then the cool thing is, once you draw this, come back a few weeks later, come back a few days later, and see how it respects.
And the way I would be looking at this is, if I have a box up here and a box down here, if price breaks through that,
I'm going to this zone.
oh,
Yes. So if price breaks this, I'm going to the zone. Right now, we're getting kind of a doji formation. If price breaks through, this is a tighter zone. I mean, this is GJ, but this is still, really slow for those of y'all who trade in the morning with us. That feels like a painful few hours. Oh my word. That's only 15 pips. I don't think I could do it. Guys. But if you were trading this in this way, to say I'm trading between the zone, okay, price is going to here as your take profit 1. This is your take profit 2. You protect after you hit take profit 1 and hope that it hits 2. Okay. That's how you would work this. Again, same thing with down here. If you got a signal to sell, like for example, with your scanner or whatever else systems you use, anything comparable to mine means you might get a signal soon. If you get that signal, you say, okay, this is my take profit 1. I'm going to protect when it hits take profit 1. I'm going to hope it comes down to here. No guarantees, but then it's a risk-free trade, right? That's the kind of the concept of how to use this. So does that help you see that, Mylan? Am I saying your name right?
Yes, ma'am.
So don't
Yes,
draw
ma'am.
50. I mean, you can. I know one guy who has amazing accuracy, incredible accuracy. He lives in another country. He's in our group. He doesn't come to the calls, but he has like 58 lines right here. And if it works for you, I won't knock it. So if you can show me 90% accuracy, I am not allowed to argue with you. If you show me 80% accuracy, I am not allowed to disagree. But if you're showing me a blown account and you're showing me that you are not being successful with having 50 lines, I'm going to tell you the first thing you need to do is take some of those away. So I don't care if you want to use the most recent high and low, you can do that. So here I'll use a different color and I'll draw with the candles. Let's change this color to blue. Let's say you just want to take the most recent high and low kind of mentality. Here's current price, recent high, recent low. And then this is your supply and demand. You can do it that way too. You can definitely do it that way. And in this case, you would have this area here as your next target, this area here. I'm going to ignore those wicks. I'm going to go with kind of the base here. I'm not going to count those huge wicks. That's not a target. So I'm going to kind of go the bottom of those, the body of those candles. You can do it that way. That's 4 lines. It's 2 above and 2 below. And that's just going off of where price stopped and turned around. You want one more, you could add one more, but this isn't a big enough zone. So that's it. How many do you want to have?
Enough.
I'm guessing you're one of those 100 line kind of people.
No, ma'am. I
Okay.
can't say.
I will say that if one of the lines that you have on a 30-minute chart has confluence with a 4-hour or a daily line, that's an important line. You need to pay attention to that. The higher the time frame, the more important it is. And the sharper the movement away from price, the more important it is.
So keeping this on. So remember, this is going to stay put. That's the best part about trading view. Oh, that's an ugly mess, huh? Would have been
Ms.
way
Jenny, I have
better.
one more question.
Yep.
I've seen I've seen trainers they'll start the daily, draw the support and the resistance, go down to the 4-hour, do support and resistance, and just go down that way. Not support and resistance, I'm sorry, supply and demand in each different time zone, at least 2 different time zones.
Well, you
on
can
the chart, on charting.
So let's take a look real quick. Let's go to NAS. Let's go to the daily time frame. On NAS, okay, we're at all-time highs. We've got an election coming up. For those of y'all who don't know, we've got a doji. We've got some major things coming up. On NAS, that makes sense. Well, only like if you're at key areas. So if we know that this is the high and this is the low, like that makes sense. But if I'm on GBP and ZD, that's an ugly wick. Let's try to find something without the super crazy ugly. USD CAD. There we go. So something kind of mid-range there. There we go. Not something major, not something crazy. If I'm at, this, daily low coming up, right? That's a relevant level. This is a relevant level coming up, right? But if I'm just kind of somewhere in between and I'm nowhere near the daily high and daily low, with prices like right here, that's not going to really influence my many 30-minute, 15-minute, 1-hour trades nearly as much. It's only going to matter if you're at a daily level. So knowing what's going on in the daily is great. Some people will go and draw lines from like the monthly, the daily, and they only use the high and the concept of supply and demand, right? They're only drawing, this is how they do it. Ready? So, and remember, I'm not going to dare say that one way is the best way, my way, your way, or this guy's way, but let's just talk. So if we're going off of this year's, so this is, I have to look for 2020 this year, right? So go to January, that's December. That's this year's, we're almost at the yearly low. Okay, just so y'all know. This is the yearly high. Okay, so now we have that. We're going to go down the monthly. This is literally, yeah, that's crazy. So this is weekly.
Can we just go back to the monthly quickly? I want to point out one thing. You'd be tempted to say, okay, that's a zone. But now go to your daily. This is the area that wick was. There's a lot of price action that happens inside of that.
A lot of moves, a lot of money to be made. So paying attention to that, like if you're going to be the person who keeps this on here, by all means, this is how I would do it. Like if you're going to lock this and not tamper with it, this is your official yearly low. We're actually pretty darn close to it in comparison of this big picture. So I definitely think it has some value. But if you're not going to be trading this bigger time frame and truly swing or quote unquote position trading, it doesn't really have a value at all. So going to the weekly, we're going to find the monthly high and low. So this month is October. This is still October. This is October. This is September. So this is monthly. Nope, that's September. This is September. So this is the monthly low. And they actually have color codes for this. This is the monthly high. And they will manually do this, which technically it takes like what, an hour once you get good at it, maybe a little less. There are tools that do this also. So, you have to pick and choose what you spend your hour on. The value of spending your hour on this is learning to actually see what price is doing, and you're going to remember it. Having an indicator draw your yearly and monthly lows, your brain isn't going to retain that. So now we're at the daily. We're going to find our daily high and our daily low. Well, we're on the daily, so this is a pretty small zone. We have to go down more to even find it. We only have 4 hours into this candle, so we don't really have much to go off of, really, right? That's pretty much like this. Today's the 20th. Wait, I know we don't have 4 hours into today, guys. I'm pretty sure.
There's 1, 2, 3, 4. Yeah, we just closed the first 4-hour candle.
I was like, we
So
should be one
that
candle.
little stub there is the last 10 minutes.
Why is this also saying the 20th? See how that's saying the 20th?
Don't know what time zone your trading view set to.
New York. Huh. Well, either way, this one candle isn't enough to go a basis office, and then you keep going down. So you would find your levels of kind of quote unquote supply and demand that way. I know that way, which isn't bad, but you just have to decide how you're going to do that. So on the 4-hour, we don't need another zone because this is the same top and same bottom all the way from the weekly time zone. Remember, we didn't draw it on the daily. We drew it on the weekly and the monthly. Those didn't change. Like in terms of the yearly, we don't need anything more. Trust me, we don't care about what happened in 2006. Like some of us were not of high school yet. So like it doesn't matter. This kind of does matter. So
like myself.
oh yeah, I know. You're the prima donna. Prima donna.
No, we have a Donna.
She's the real prima donna, huh? Definitely. So how do you want to mark your charts? How much support and resistance do you want? And what time frame do you want to trade on? And then once we answer that, I'll answer a couple of questions and we'll jump off. Since you're the most verbal right now, I'll work with you and tell you exactly what to do special for you.
Well, I'm new here. I've been trading market maker and some price action, and I've mainly been trading off the 15 an hour.
Okay, so market maker is somewhat time and talks. I mean, but the market maker is not bad. It's just a really long set of, very, contradicting rules is my takeaway. They've got a rule for everything, but then they've got another rule that takes it away in terms of like the 50, the M's, the double tops, all of it. So M's and W's, the market makes up all M's and W's, right? It's not a bad system. I know people who make money, have made money with it. Price action is still king above everything else, even above me. So you want to trade the 15-minute time frame during what session? New York, London, or what?
I struggle with London, but New York, I'm in and out of it. So
okay. So let's say you want to trade the 15-minute time frame in New York. So then your job would be every Sunday, come mark up your charts on the 4-hour. 4 hours plenty. You don't need to go to the daily unless you're like, let's say you hit this area, like what we're seeing now. We're at the very bottom, okay? And we're on let's go the 4-hour. Let's say you're trading USD. I'm going to mess it up. This might not be the best example, go figure. But we know, like, okay, so we're pretty close to the bottom and we want to see a slightly higher view. You can go up. But in general, the 4-hour is enough. The only time it's not enough is if price is at the top or the bottom of your screen. So there are some consistent, duplicatable rules that you can comprehend and follow, meaning we have so many feelings and thoughts and what ifs. We all get tripped up, including myself. So I am not exempt from this, but we do 1,000 different things and then we expect to get a consistent result. So a few things to write down is, okay, I'm going to go to the 4-hour time frame. The only time I'm going to look higher is if price is, in the bottom or the top of the chart. If price is at the bottom of the chart or the top of the chart, and that means, within an inch. I don't know how big your computer screen is, but you can decide how many pips or whatever rule you need to set into place. Then you'll go to a higher time frame. But otherwise, again, consistent, duplicatable should be your thought process. If you can't do the same exact thing next time, you shouldn't be looking at this as a viable step in your successful trading plan. So step number 1 is you're going to use the 4-hour to mark up your charts. You can use the 4-hour and you can go down to the 1-hour. And to find the slightly better zones if it's not super clear. So if you have too many wicks or you can't see it clear, you can go down to the 1-hour and define a few more zones. But you need to have, are you position trading or day trading, meaning you're out at the close of business, or are you trying to hold for a few days? What is your game plan there?
Intraday swinging, I guess.
So intraday meaning you'll hold for a few days?
No. It's
You're saying intraday?
Intra.
Yeah, so within the day.
Right.
Okay. So you want to have it closed out by the end of the day. Day
Yes,
trade.
ma'am.
Okay.
How long do you like to hold a trade?
No more than 2 hours usually.
Okay,
saw
so you're
getting
willing to
into
swing
it.
it to some degree.
Right.
I don't know, Scott. I feel like if you're getting in on 15-minute time frame, so ready, this is 11. Here, we'll drop a line, guys. This is 11. Okay, well, anywhere in here. That's 9. This is 11, so that's 2 hours apart. Come on, silly butt. Oh, this is the 1 hour. We got to change that up. Uh-oh. Delete that. Where'd my line go? There we go. So that's 9 o'clock. Now let's go to 11. This is 2 hours. So if you're looking to 15-minute trade and hope to be out of the trade in 2 hours, that is not intraday trading. That's not even, I mean, I don't even know if that quite qualifies as day trading. That's, if you're looking to be out of your trade in 2 hours, you're looking to scalp. The scalp.
That's intraday. You know, thing is that within that 2 hours, you get a movement up into a zone. You have a zone running across here. You trade that down. This candle, you know, those couple of candles, including the wick of the second one, is a really nice trade. You can scalp that. That's a half an hour in and out. And
That's
depending where you get in, you can, you know, it might be 45 minutes. But if you trade down here, you can hold it up to there. That's within 2 hours.
If you're perfect, well, of course, if our entry is perfect, guys, it's going to be perfect. But we have to hope for the best and plan for the worst. So just again, using this as the candle we chose, we have 2 hours where we didn't yet make our move. So how many pips are you going for if you're trying to be out of your trade in a couple of hours?
I was told 20 to 30 in and out.
Are you using simplicity?
No, man, I'm new here.
Okay.
I was trying this out. I've heard about it. So.
Okay, so here's the deal. Ready? Check it out. So I'm gonna delete these. Let's start with that. Instead of having a, I don't know what I'm doing, guys. Don't ask me. Instead of having a deadline for how long you want to be in your trade, let's just talk trading. Let's say you take this entry, you like what you're seeing, we're breaking above, we kind of make this double bottom kind of mentality. You like this formation because, well, you're a market maker trader, so you like it, right? So you take it anywhere in here, right?
Right.
Anywhere. I would pick a candle. I don't care which one of the next 50, well, 20 you pick. Anywhere in here. Learning to trust that and to say, hey, okay, my stop loss is going to be below structure, that, or use a trade manager, okay? My stop loss is below structure, which we know is somewhere in and around here. I'm going to move it slightly up just because I don't want it to be, you know, conflicting with the line we drew. And to say, hey, now I'm going from my 20 pips from we got in here, that might be up here, which doesn't happen until way over here. You got to be okay with that, because this, in terms of days, is how many days? Well, hours is that's literally almost 2 full days worth of trading. So this, and that's how many pips? That's 46 pips. So I can actually move this down. So let's try that again. It hits, I'm guessing, on this candle, just in case, let's go all the way to this. But being silly. There we go. Let's assume this was enough, which it might have been. So this was 20 pips. There you go. That still took a day and 3 hours. Now this broke below the 50, okay, but it never touched your stop loss. So this is where people get tripped up and they get in and out because they lose their analysis. They get worried. They start looking for sells. Then they lose the sell. They lose the sell. They miss the buy. They close the buy, right? But if you had taken it based off of market maker mentality, which would have been anywhere on these candles, market maker doesn't care so much about this. They just trust the M's. So then, you know, this takes a day, right? One whole day to get in and out. Okay. So first piece of advice is definitely let your trade run. Trust your analysis. It's probably not bad. The market maker lessons, if you've actually studied it real well, aren't bad. Most people are too over the top to get in and out all the time. I mean, that's hard. It's definitely hard to kind of be the person who's in and out and to think you're right. And then all this stuff happens. Other people posted in the group, they posted how they just made $4,000 and you're excited and you're frustrated and you're like, well, what about me? And I want to do this, right? So you go to look for other trades or you quit on the trade versus you were right, but you didn't hold it to be right. So I mean, first things first, in terms of marking up your charts, go to the 4 hour, go to the daily, the 1 hour, unless price is at the top or bottom of the screen. And if you're taking 15-minute entries, take them based off of whatever rules you're using. Even if you took this trade, the bounce, the 50 bounce, right? It would eventually play out, but this one, even in itself, you're taking that 50 bounce. It takes 6 hours ish, give or take, before it hits. This one's a little better. But this one even takes a couple of hours before it hits its target of 20 pips. So this is a 50 bounce. This one, you're going to get times where you take it and it kind of retests the 50, and then you have to wait through lots of time, and you have to learn to trust that. Does that help at all, or?
Help a lot.
Are you getting in and out of trades too often because you really wanted it to be done in 2 hours, but you weren't done, so you gave up on the trade?
It was just the way I was trained, and which was, you know, basically, I guess you could say.
I've been trained lots of ways. I picked up good habits. I picked up bad habits. I promise not to judge you. Just don't judge me either. Deal? Okay. Is there, do you have any?
Starting with higher time frames, if you're starting on a 4 hour and you draw some lines on there and you get down to your trading time frame at 15 minutes, don't be afraid to adjust the position of those lines to line up with your 15-minute price action.
Yeah, I agree.
Not going to move them a lot, but you're going to kind of tune it to your trading time frame.
So if you had a line here, for example, you can kind of drag and drop this line and, oopsie, silly me, and say, hey, well, that's not where the zone was. I'm going to put it here. You know, it's going to be a little off when you get super honed in. You can put it a little bit in a better zone and drag and drop it a little better. But that'll help. I don't know, what are you mostly following the market maker still currently?
I haven't traded in a year, and I'm getting back into it because of things, though.
And I would also guess that because you're here, you probably struggle a little bit with the market maker methods.
Right.
It was more M's and W's. And I say, I know there's more to price action than just M's and W's. And then you have.
Yeah, well, you know, there are so many different ways of looking at the market. Like Jenny started this whole thing out with, there are many, many ways of looking at the market. And, you know, if the market maker method makes sense to you and you can be successful at it, great. You don't need to look anyplace else. But if you're having trouble getting that resonating with you, or you're having trouble seeing it or whatever it might be, then finding another system that works for you is great. But you have to give it enough time to sink in to be able to say that, yeah, this is my system.
So don't just quit on it too quick. I mean, you have to, don't be the person who just jumps from 5,000 different, you know, strategies because it didn't work, because you took a bad loss. You have to stick with something long enough to make it work. But yes, if it didn't, if you have 50 trades of following the rules that you were taught in the way that you see them and can prove that, and you've done that a couple of times with a couple of tweaks, which means like 150-ish trades. Okay. So you're talking treating this like you would a college degree. Most people aren't getting 50 trades of the same system. They're getting 10 or 20, and then they do some other things. They broke some rules. Their feelings got in the way. They did 10 or 20 different trades different ways. So you have to do your due diligence, like go get your 50 trades a few times and then make your decision once you've done that, and can verify that when you drag and drop your trade on the screen, you can see, well, wait a minute, I chased the trade, I was at structure, or wait a minute, this M wasn't even complete. I didn't wait for it to break the middle. I took it on the top, and I was timing the top. And then you'll see that of this, you know, 30 trades you took, you'll see that you were letting your feelings and your emotions get in the way of your trades on too many of them. And then you can only count like so many. You can only count the ones that follow the rules. So there's that. So just before you quit on something, know that. Fair enough.
Fair enough.
And, you know, we don't know you.
Yeah.
So, you know, don't take anything too much to heart as far as, you know, we're telling you what to do, because we don't know you, but we're kind of talking to everybody here.
Yeah, true. 100% true. So, okay, guys, well, this was super simple, but honestly, it is super simple. So I really hope that you do this every Sunday. Pick the pairs you trade. I don't care, pick 10. And then if you're using a high time frame, you can go back a little bit less often. If you're using like the 4 hour or 1 hour, go back every Sunday and see what happened at the zones you drew, because as we showed you, what pair were we on? I think it was a C pair. Whatever pair we were on, but let me go to the daily chart. I think it was this one. There you go. You'll see that this actually continues. So you'll still see this next week. You know, you'll see these lines when price starts to paint. You'll see, wait a minute, I drew them here. This was awesome. It broke through and it retested and it went. Or you'll see this zone you drew wasn't so great. It wasn't so great. Maybe I need to adjust the way I drew this one. You'll have a lot to gain. So please consider doing that. If you have any other questions, please put them in the chat. Real quick, I'm going to touch on some of the questions in this chat. To the person who private messaged me on the Zoom, I will talk to you tomorrow morning at 8 a.m. So 8 a.m. I will talk to you on Telegram, but I can't read all of that on this live call. So sorry. Mike, it would depend on the pair, if it's a slow moving pair or rough. Kenneth, would these same rules apply with simplicity? Yes. If you don't know this stuff and you're just taking an entry and you don't know that it's either A, breaking an area, or B, like let's say if you got a signal to buy or to sell somewhere in here, which you probably might have, okay, you could have depending on your settings, you know, you're kind of in the middle of this area, you know, even on the bigger time frame, you got the candle, let's say you painted here, you've got a little bit of room, but I'm not trying to swing this much room. I'm trying to swing this much room. I want to swing when I'm, you know, at the bottom or at the top of like the supply and demand. I don't want to swing in the middle. So having this drawn, particularly like on the daily or the 4 hour, is going to help you a whole bunch when you're taking those 30-minute and those 1 hour kind of simplicity scanner trades. Because if you got a signal here, which it's a very good chance you did, you probably got one here. In some cases, you're going to have enough room, but by the time that even paints, depending on the setting, this is how much room you have, which is a counter trend trade. And then you may have had room to protect it, hopefully, but then it goes straight against you. So knowing this is going to help you a lot in any strategy, in my opinion, because this is price action. This is basics.
Yep. And any trading system, you know, indicator based or whatever, is going to give you signals, and some of those signals are good and some of those signals are bogus. And you're looking for reasons not to take trades.
This is your reasons not to take trades. Ray said, do you trade the supply and demand zone differently from the support and resistance? Absolutely. Supply and demand have a lot more value than support and resistance. And for the person who asked about trend lines, when you add this information with trend lines, that is a complete trading system by itself. Like no indicators, nothing else, nothing at all. This will tell you every single thing you know. So when you bounce off of this on a smaller time frame, you draw a trend line, you wait for you get the flag, you're taking it. When you bounce off, or when you break through, when you reject, the trend lines are the end all be all when it comes to this kind of thing. That would be a complete trading system, no indicators needed. So yes, but I can't go over that tonight. So maybe not next Tuesday, the following Tuesday.
Now, the other thing, if you want to practice doing this, you know, if you move your chart a whole page to the right, you can draw your zones there and then see how they do in the next screen.
And then just move it back over. Although you have a bias, you've seen it, but yeah.
Right, but you know, you can go back several pages if you want to, but if you honestly draw it for yourself in a particular position and then see how it plays out, you can start to gain some confidence in your ability to find levels that matter.
That's it. So, okay, just to be clear, in order to get the daily dot, what do you have to do? Tan, if I'm saying your name correctly, please message Shark with Flashes. She's the coding giver outer person, and I know she gets tons of messages and tons of admin responsibility, so give her a second, but she's the person to ask. I believe if you go to the website on step 5 or 3 or something, it's been a while since I've been there, that's where it's at. So, and that's about it, guys. So PSB, by all means, tomorrow morning I will talk to you on Telegram and help you where I can, but I can't go over all that here. So other than that, I hope you guys all have an amazing night, and I hope that this was a little beneficial for you guys to maybe learn a little bit. And who is that? Is somebody trying to speak, or did they accidentally unmute? Okay. Well, I hope you guys have an amazing night. I hope you guys have a very profitable and super blessed week. And thank you for everyone who comes and hangs out. And I hope you guys take care.
Good night, Jen.
Thank you, Jen. Good night, Jenny.
Good night, everyone.